The strength of candlestick reversal signals allows investors to take advantage of the optimal times to be getting out of short positions and into long positions. As we established earlier, the downtrend started when we saw the doji followed by a bearish engulfing signal, creating a bearish left-right combo and closing below the T-line, starting the downtrend. Now, with a doji in the oversold area, that becomes the alert that any positive trading from here could possibly give you a bounce back up at least to the T-line. The fact that we saw the pre-market futures open extremely strong, very bullish on Tuesday, not only told us the bulls had stepped in, but note how they gapped it up from the doji, creating the potential of a best friend reversal. A best friend being a reversal with a doji followed by a gap up. When this occurs in the oversold area, not only are the probabilities that a reversal has occurred extremely high, but the strength of the reversal is being indicated by that signal. Although all the indexes did not show a reversal signal, for example, on the NASDAQ, this big up day was not a candlestick reversal signal. However, if you put it in the analysis in conjunction with the Dow, you knew buying was occurring. The confirmation now becomes that the indexes are staying above the T-line. Remember, we have a very simple T-line rule. If you see candlestick reversal signals like we saw on the Dow and closing above the T-line, it has to be assumed that the uptrend is in progress as long as we don't see a candlestick sell signal and a close back below the T-line. When you utilize the individual candlestick signals, such as the kicker signal, where it opens here, closes here, then gaps up above the previous day's open and goes the opposite direction, that kicker signal is going to create a strong bullish sentiment in spite of what the overall market was doing. Notice what it did in this range when the market was still starting or still in the process of heading down. What that basically does is it tells us that if we're buying a strong individual signal when the market's going down, when the market starts turning back up, it's going to add that much strength to that existing trend. That same analysis was incorporated into our recommendation on plan today. Notice that they had a kicker signal, it consolidated, but it couldn't close below the T-line. We were starting to buy if it came up through this level and had a good day. Again, because the probabilities were that coming off that kicker signal told us the indecisive nature of that trend was now very decisive. The trend kicker signal works very effectively for telling you there's going to be more upside. Notice the uptrend had started. This is what we call a 45-degree. Bullish engulfing, big price move. And notice they haven't been able to really close it below the T-line. But when they got here with a big down day, then gapped it up and went the opposite direction, that was additional confirmation that the uptrend was still in progress. If you apply that same logic in the trade of being short in NVIDIA, and you're in the oversold area, and the next day you see it gap up above the previous day's open, that has the potential of having a very strong bullish reversal signal. You close out your short positions immediately. Now you've had a kicker signal and they're maintaining above the T-line. Now you can at least calculate that you're in an uptrend. Where's your next target? Maybe the 50, but this is where you allow for adding any other technical analysis that might provide a target, like, for example, putting on Fibonacci retracement numbers. At least you now have the probabilities that you're heading up. You can put other indicators, Fibonacci retracements or moving averages, that could be the likely target. But the important factor for analyzing what the overall market trend is doing allows you to identify which patterns are setting up. As we can see in our recommendation on MRVL, we had a potential flutter kicker type signal. Moved up some more, moved up some more, moved up some more, and then broke out through the 50, telling us we have a wave 1, wave 2, going into wave 3. Again, knowing which direction the market is moving and which signals and patterns are producing the strong upside potential, when you combine those two analytical factors, you basically put yourself in high probability trade setups. That'll be it. We'll see you in the chat rooms.